Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is Christopher Ecclestone, Principal and Mining Strategist at Hallgarten Company. Chris, welcome back to Kitco.
Thank you very much. Glad to be back.
Let's start with gold. US Federal Reserve Chair Jerome Powell opened the door to an interest rate cut in September, signaling rising risks to the labour market amid persistent inflation concerns in recent comments he made at Jackson Hole. Chris, 2025 was the year when a lot of people were forecasting there would be several interest rate cuts. Not happened so far. What has stayed Powell's hand from cutting rates so far this year, and why may we be on the verge of an interest rate cut now?
Why he hasn't? Well, most of the Trump tariff measures are inflationary. You can't get around it. He's adding extra charges onto imported goods into the US, many of which, copper being a good example, are not domestically produced in enough amounts that tariffs would have any effect in the short or even medium term in generating domestic sources. So that means that imported goods have to cost more by the amount of the tariff. There's a lot of stuff comes from China. Go to your Walmart and have a look at the shelves. And if they're slapped with higher 25% tariffs, they're 25% more expensive. And much of that stuff, because of offshoring over the last 30 years, cannot be produced in the US. It's a problem. And of course, the Fed doesn't want to turn around and say that because it's a direct slap in the face to the president. And they want to avoid a conflict with him. But as it is, they've got a conflict with him anyway. I think that it's got to do with the inflationary pressures from the Trump policies more than anything else.
Okay. Now, people in the gold sector, I would say, generally view rate cuts as a positive, as they lower interest rates, reduce the attractiveness of the US dollar and treasuries, etc., which is obviously a key competitor to gold. Chris, when and if interest rate cuts do occur, what impact do you think it will have on the gold sector?
None. Because I believe that the gold price is a reflection of uncertainty. It's, a cut in interest rates is a thing that is announced and it happens, but it doesn't take away any of the uncertainty. It doesn't take away any of the global tensions at the moment. And I think that these are the main things that are driving the gold price at the moment. We've heard these arguments forever that, inflation will make the gold price go up and blah, blah, blah. And finally, the gold price, made a big move from, 2,000 to 3,500 on inflation going from, 1% to 3 or 4%. That was an outsized move by the gold price compared to the very small move in the inflation rate. So I believe it's all got to do with global tensions overlaid with the uncertainty of Trump tariffs and other actions that Trump is taking, because they're creating an uncertain environment all around the world. People will eventually get used to them. People are already to a degree discounting some of his measures. When he puts a tariff on a certain country, then people expect that 2 or 3 days later, he will retrace on that tariff, and there will be either a lesser tariff or more negotiations, or the other side will give up something and it will go away. But some of these tariffs, as we've seen, have sort of stuck. And so you can't be sure that a Trump tariff is not forever.
Absolutely. Now, the outsized move in the gold price means happy days in the precious metal sector, as gold miners are outperforming. They're now outperforming the metal as well. And that is not all. Newmont, the largest gold company, has outperformed nearly every stock in the S&P 500 this year, even the big tech names, the big seven, the magnificent seven. Wow. Who saw that coming? Chris, gold companies are finally doing what they've promised to do for a long, long time in terms of investor returns. Gold companies took a long time to awaken. Can we expect their performance to continue for a good while?
Going up? No, I think that their performance has to be linked to the gold price from now on. Because can they outperform the gold price? Incompetent management in gold companies, or in the whole mining sector, but in slack management in the many gold companies means that why would you prefer a share of a managerially challenged gold company versus an ingot of gold, whether it's an ounce or a kilo or whatever? You know what you're getting with the ingot. And this brings us to the classic. We're in a situation now where big cash piles are building up these gold companies, and what happens when that occurs in the past? A little bit of dividends to shut them up, the shareholders, and then some dumb deals. And dumb deals we have not seen a lot of lately. And you know why? Because most of the dumb deals have been done. We do not have all that many gold companies to consolidate anymore. I think the grandfather of all deals would be Newmont merging with Barrick, and then it's essentially game over. There's no one else left. That wouldn't be opposed on antitrust grounds because it's just a gold producer. I mean, it's not something that will stop the economy if there are two become one. But even if the two remain two, and then they look around for other things to buy, there are not that many things for them to buy. Certainly because they've cleaned out a lot of the second tier and the lower level of the first tier of the gold mining industry. So, they have to then, if they're going to do acquisitions, go much further down the totem pole. And when they go down there, they don't like what they see. They do not want to do small deals. It doesn't move the dial for Barrick or Newmont to, buy a mine somewhere for $200 million. They want to buy a miner for $8 billion. But the $8 billion miners aren't around that much anymore.
That's interesting, your comments there, Chris, and it leads us into our next segment because I've been crunching a lot of the numbers from the second quarter results. Production is flat. It's the gold price that's lifting everybody. The top three gold miners, that's Newmont, Agnico Eagle Mines, and Barrick Mining, they recorded their highest free cash flow generation ever at about an aggregate of $10 billion in the second quarter. Cash is growing, but debt is not being paid down. So the sector continues in a net debt position, with the producers prioritizing share buybacks and dividends over other aspects of capital allocation. Capital allocation is becoming a bigger question. You can hear that on the results conference calls. The analysts want to know what companies are going to do with their additional cash. So riffing on your comments just a moment ago, Chris, is now a good time to ask if the gold miner should perhaps take a leaf out of the oil and gas model and return larger amounts of this cash bonanza that they're getting to shareholders in dividends.
Absolutely. If you cannot do a deal that is good, and I don't believe you can anymore, it is better to return everything. Pay down some of the debt, of course, because, gold has a certain cyclicality to it. The gold bugs may not want to hear it, that it's 3,500 and it's going to 5,000, but it could go back to 2,700. And in that circumstance, paying down your debt might be more attractive. Reduce your cash flow, because you're going to have lower cash flow if the gold price goes down. No one wants to say that the gold price is going down, but it could do. Outbreak of peace in our time, You never know what could happen. Trump fancies that he's going to solve all the world's tensions and they're all going to go away. We haven't seen that happen yet, but if it happened, then the gold price would not be able to continue to be maintained because of international security issues. But I prefer to see a scenario where the gold price stays around about where it is at the moment. But in either of those scenarios, if you can't buy anything cheap or accretive, then the best thing to do is to give the money back to the shareholders, and they can go and buy shares of companies in the next big sector, whether that's base metals. And I think that some of the less looked at base metals, zinc, for instance, should be looked at. Copper, of course, has moved, but many of the other base metals have been sort of like left behind. But, one metal that people don't look at that often is aluminium, and that has gone up a lot. So everything's moving sort of, but it's not all moving together like in the commodity super cycle. Things are sort of like popping up when people move on from the story of today to the story of tomorrow. So yes, I think you should give the money back to the shareholders so the shareholders can decide their own capital allocation if there is nothing that a large gold company can do with its cash flow to increase its ounces.
I think you make a valid point there, Chris. A lot of people are looking with their head upward about when they reflect on the gold price, and nobody's really looking at the let's say the worst case scenario, the cyclical adjustment when the price will fall again. Of the mid-tier companies, about half of them have an all-in sustaining cost of above $2,000 per ounce. So there is a vulnerability there to lower gold prices. And as you say, that makes them much less attractive from an M&A point of view for bigger companies. Now, it's not only gold companies that are experiencing happy days. Silver briefly broke $39 per ounce, and it's touching on that again today as we're recording. And silver stocks are beginning to fly too. Chris, $40 per ounce silver is approaching fast. What would that mean for the silver sector?
It's a great motive for the stocks in the sector. The question is, are the managements up to producing any more silver? Quite a lot of silver actually is produced as byproducts of base metals or as a byproduct of gold mines. How many of all these new silver plays out there or revived silver plays are actually producing anything? They're mining the markets rather than mining the metals. And to really get the benefit of above a $40 silver, you need to be selling this stuff.
Absolutely. Now, the US Department of the Interior released its draft 2025 critical minerals list this week with 54 commodities on that, including 6 new ones, which are potash, silicon, copper, which you mentioned a moment ago, rhenium, lead, and silver. The addition of silver makes the US the only major economy to consider it a critical mineral. The US Geological Survey will also consider the inclusion of metallurgical coal and uranium as it prepares the final list. Chris, silver being a critical mineral or on critical minerals lists, what do you think of that? Will that help drive greater investment in the silver sector?
No, I don't believe so. I think it's just a joke. Buy lead. And I'm joking there. Lead is a sunset metal, and for the mere fact that they put it in the list actually devalues the list. All these lists are being devalued now. They're becoming sort of like a rubbish currency because governments are loading into the lists all the pet projects of their cronies and, political sectors, and silver is important for a few things, but silver is not in short supply. It's not under Chinese control either. The Chinese are not the largest silver producer. They don't dominate the silver market. The silver market is driven by all sorts of a plethora of producers all over the place. And silver supply is not under any sort of threat. and lead supply even less. I mean, it's just like really become quite farcical.
Well, President Trump he's been a big supporter of cryptocurrencies and things like that. He's issued his own sort of meme coins, and him and his family and his children have benefited greatly from that. Is there a possibility here that him and his family or associates are getting into the mining sector and looking to create more positive conditions for themselves?
Well, we did see the transaction where the companies, I can't think what one it was, but the one that's based in Central America, but it's a large company in the US, moved into precious metals. Money is burning a hole in the pocket of these crypto structures. They are essentially large empty boxes that need filling with something to give them an underlying net asset value, because otherwise their net asset value is hot air. And how much is hot air worth? And so, it's an interesting situation where you've created effectively a scam. You've sold snake oil to the public. Now you have to put something into your snake oil to make sure that sort of has some sort of effect. It has an effect, a curative effect. Throw an aspirin in. But that's really the situation you go. You've got to backfill your bubble so that your bubble looks like it's more solid bubble than just a normal bubble. But bubble it is all the same.
I think we'll have to use that as the headline for this segment, Backfill Your Bubble. Great one. One company that higher silver prices are good news for is Pan American Silver, which said that the Mexican Federal Economic Competition Commission approved its acquisition of MAG Silver, paving the way for the deal to close next month. Chris, this deal seems to have been around for ages, closing for ages, seems to have taken forever to get over the line. But with silver hot, potentially getting hotter, there aren't that many other silver companies available or in the sector. You mentioned this in your comments a moment ago. Which silver juniors do you expect to be the next batch that will potentially be on the M&A block going forward?
Rather than mention names, it'd be better to look at sort of what the characteristics of the companies that would be up for grabs would be. And I think it's production, and a decent flow potentially of extra ounces of production. So a company, whether it's in gold or anything really, if it doesn't have any perspective of future ounces or tons or whatever it's producing, then it has to be at a discount. But if you've got upside in there, you've got ounces you haven't mined, you've got proven properties that you still haven't developed or you're in the process of developing, those companies are going to get eaten up. And the mere fact that Pan American Silver buys up MAG Silver is once again a bit like, as I said, about Newmont and Barrick, then there was one. And so we're narrowing down the investment options. And the mid-tier is disappearing. If MAG Silver was mid-tier, I think it's probably top tier of silver producers. And so it's just narrowing down the options. And there are no companies in the third tier that are about to leap up that ladder, because many of those are just sort of like mining the market, as I mentioned before. They're just hoping, I've seen quite hysterical news releases and promotions coming out of some of the silver wannabes in the last few days about the move towards $40, and also about this criticality list thing. Instead of saying, oh, this is a joke, they've obviously latched onto it and said, oh, this is an extra thing that we can use to promote silver. I think silver's virtues are self-evident, and they do not need being added to a stupid list that is basically a list of everything because
Yeah.
when you talk about 52 critical metals, I mean, why don't we just take the whole of the periodic table and just say, oh, it's all critical? Except
Absolutely.
for francium, maybe.
Now, another M&A candidate is Omai Gold Mines. The company's just released an updated resource estimate on its Omai property in Guyana for a combined 6.5 million ounces, which the company said firmly positions Omai as one of the top two largest gold projects in the country. Omai is a brownfields project with road access, an airstrip, a cleared site, established tailings, and other benefits. Chris, Omai is looking like a good takeover target. But rather than talking about Omai, what is your view on Guyana as a jurisdiction for mining?
Oh, Guyana used to be very marginal like 20 years ago, but Guyana's totally come in from the cold, and it's done all the right things. It's attracted majors. I mean, IAM Gold used to be in there, but yeah, I think it's a great jurisdiction. I mean, it's just a sign the gold rush that's developing about Guyana as to the missed opportunity in Venezuela. Because Venezuela should be on this bandwagon as well, but of course, Venezuela being what it is, it's totally missed all these opportunities. It's like 500 years ago, Sir Walter Raleigh went to Guyana to look for El Dorado. El Dorado wasn't up in Peru in the heights of the Andes. It was believed that El Dorado, the man of gold, was in the flatlands of countries like Guyana, Colombia, and Venezuela. And lo and behold, Omai is showing that there's gold in them there flatlands.
Okay, now let's move to a neck of the woods that you know very well, and that is Argentina. Lundin
Yeah.
Mining and BHP said that a technical report will be issued in the first quarter of 2026 for the development of the Vicuña district in San Juan in Argentina, with the Jose Maria deposit likely to be the first to be developed. Neighbor NGEX Minerals filed a notice of meeting and management information circular for a shareholders meeting to vote on a spin-out of NSR net smelter return royalties on the Lunahuasi and Los Helados projects in San Juan and in Chile, and the distribution of the shares the company expects to make in a subsidiary that it's calling or expects to call Delta Royalties. NGEX shareholders will receive a quarter of a share of Delta for every NGEX share. A number of companies with great assets add royalties to them that they then spin out to their shareholders via Newco. Great Bear Resources did this with Dixie, for example, in Ontario, in Canada. Chris, are you a fan of this practice of companies putting on royalties on great projects and then spinning them out to their shareholders? Or do these royalties take the shine off their projects?
I would agree with the latter point. They're definitely giving away some of their future upside to these entities without necessarily raising much money out of them. Usually it's sell a royalty to get money to do the development. Now, obviously, with the parties that are involved in these projects, they don't need to go rattling their cup on Bay Street or on Pitt Street to raise some money. They spinning out these things is just like a way of keeping the shareholders, like fat, dumb, and happy. Just tell them, oh, here's a little bonus share in the short term. Because you're going to have to wait 10 years until this thing is in production. But then you create these rather unviable structures, frankly, because we had this big proliferation around 2020 in the number of royalty companies out there. And these were royalty companies that had, a wide spread of assets. These new generation of royalty companies have, as in this case, I think, 2 assets. And then you put a management structure on top. Who's going to pay the management of this thing that isn't earning any money because the asset is not producing? So one thing is, when you look at royalty companies, the big ones, you look at their producing assets because those producing assets pay for the overhead and then pay for the dividend. If you've got royalty companies that have no revenues whatsoever and not likely to have revenues for 5, 8, 10 years, what value are they? They eventually get sort of hoovered up into bigger constructs, which may be worthwhile or maybe not. But essentially, they're lottery tickets on a lottery ticket you already have. Because if you're a shareholder of NGX, you've already got the lottery ticket. Why do you need another one? And in fact, it's a lottery ticket that detracts from the first one you own.
Absolutely. And in addition to management fees, you've also got all the listing fees, accounts fees.
Yeah, absolutely. Yeah, no, that's very true.
Okay. Finally, just around the corner is the Precious Metals Summit in Beaver Creek in the second week of September. And that is followed by what is now called the Mining Forum Americas, which is known colloquially as the Denver Gold Show, where Kitco Mining will be filming video interviews. So hit the subscribe button to stay in touch and to see those. Chris, I know you're not going to these events, but obviously this is a big moment in the gold calendar. What are your expectations from these shows? Will they generate more investor buying? Will they stimulate more M&A, or will they stimulate more CEO hangovers or something else?
Yeah, CEO hangovers and pain in the back from all the back slapping. And if no one will slap your own back, then you have to do it yourself. Self-congratulation for $3,500 gold when you didn't make gold go to 3,500. And as you just said, many of the second-tier gold producers are at all-in sustaining costs of over $2,000. That's a good reason to have public stonings of executives, not to go around congratulating them on their prowess at management, because they've let costs get totally out of control, and it's like decadence. It's decadence, and they've made themselves vulnerable to a decrease in the gold price by having these high all-in sustaining costs that essentially come from just bad management.
Okay, well, I'll be there. So probably the next time we speak, we'll be able to have a bit of a debrief on what happened and what I saw and heard there. That's it for this week. Chris Ecclestone, thank you very much for joining me once again.
Thank you very much.
And I am Paul Harris, and this is Kitco Mining.